Good morning, everyone. Let's begin. This is the London session on TopstepTV. If you're here for the first time, my name is Deeyana Angelo, aka Market Stalker Dee. I've been trading for 17 years, and 12 years out of that, I've been trading futures, so it's been a while. I'm also a Series 3 registered professional. Let's have a look at what's going on today. So we have a couple of releases today that are very interesting. One is, of course, the crude oil inventories. Crude oil is already on the move, as is RBOB, gasoline futures. So I'm probably going to be waiting for later on before I do anything, primarily because it's very likely that they're going to be waiting for the CPI, right? So yes, crude oil is moving. It's sort of in its own story. So we're going to see whether we've got any levels there for later on today. And I want to explore what's going on with copper. Now, copper for now is kind of muted. We had one good move in sort of end of Tokyo, so that was 7 o'clock my time, and then since then it's kind of stayed range bound. So I'm just going to focus on this one chart here, and let's start on the daily, because I like to, actually weekly. Let's have a look at the bird's eye view. Just have a look at where those supplies and demands are. We are kind of floating on this large time frame right at point of control from the volume profile. I'm not that keen getting involved exactly in and around point of controls because it has to be the wider point of the profile. Now, sometimes you can use it if you have maybe a thinner area, and then maybe that area has a bit more volume, but this is a range, right? So if we have a look at the highs and lows, just from a very basic standpoint, this is the low. Let's change that color to white, and this is the high. So that's the range, right? So where are we right now in relation to that? We're at the bottom area. So if I was going to ballpark guess where this is going to go, I would like to see it go higher. And obviously, it's just, at this point, it's just an educated guess. It's not, it's not like, oh yeah, I'm definitely going to do longs. But it's a good starting point to see exactly where you are in that big chart location. And also on this particular time frame, I can see that we have a supply all the way up here. Now, when I say supply, it's similar to resistance, right? It's similar to where the sellers were located previously. And this supply is not exactly new because there are a couple of other areas that preceded that. So it's almost like a reactionary area, not fresh by any means, but it's far away, and it might be a level of interest at some point in the next sort of couple of weeks as we get into that Christmas period and towards the end of the year. But that is the first thing to note. Now, the demand area over here, I would say the closest one would be this one, right? Let's have a look at how this looks on the daily chart. Now, the daily chart has this little room before we hit the daily supplies. This supply, I wouldn't say it's the best quality supply because we took a while to leave it. But it might be relevant for any targets or maybe starting points if we can find something intraday. And as I dropped down to the daily time frame, that volume point of control is actually a fair distance away. So that would be 439.50 ballpark. That would be a stopping point for me for any kind of longs in the near term, maybe even today. Let's go through the 4-hour chart as well, and then we're going to drop into the profile stuff. 4-hour chart has higher highs, attempting to reverse, but until those higher highs are invalidated, until we make a lower high, again, I still think that we have room to the upside. Yeah, not sure what that is, so I'm gonna delete that. One area on the 4-hour chart that is better quality is this one. And now let's have a look at what the profile is telling us. So we're opening inside value from yesterday's London session. Until that changes, so until we actually exit this consolidation area, balance area, it's very risky to try any momentum trades, right? So if I'm gonna trade this, I would like to wait for extremes of that range until it's broken. Still inside the initial balance, so where's the initial balance? Initial balance high is this candle. Let's make this bigger, because none of us are getting younger. And I know that my eyes are certainly not what they used to be. And the initial balance low is there. So I'm going to mark these as well. So I be low, not I be high. Wakey, wakey, D. And this one is initial balance high. The next point of interest is where the average ranges are. And right now the average range for the 24-hour entirety day, like whole day, that's already broken. So that got broken by that big move that we had in Asia. So it got broken with this move. Now that's another area to look out for, and the ADR is actually very close. It was very close to what became the initial balance high later on. So I'm going to make that into a dashed line, and I'm going to say that was ADR low. So what does that tell us? What does that tell us? It tells us that we are potentially in a bit of an outlier day, because this early on in the whole 24-hour day, to get the full exhaustion of the 24-hour measure, it's unusual, right? So in order for me to do anything, I would like to see the price reclaiming both this ADR low and initial balance high. Okay, without that, I don't want it. There is one level to the downside that I might want to keep in mind, which is 421.38. That's the ASR, average session range. That is only the session range exhaustion point for the London session. Okay, so that's 21.38. What is this line? No. There's a normal horizontal line. That's what I want. Okay. So all the way down here, London still has plenty of room to move, right? Okay. So for now, copper, like I said, is muted. If we go lower, you might want to target the ASR low. But if we go higher, until we reclaim IB high, ADR low, I don't want to do anything with this just yet. But this might become relevant later on in the day, okay? Mo says, morning D, I know you don't cover NQ, but if you have a second, I would appreciate your thoughts. I would have to bring out my other platform. I don't actually pay for equities on my live account. So I don't have it. I mean, I have it on my other platforms, but I generally, if I'm going to trade NQ, I rarely trade it before like the power hour stuff, because I just find that it's way too quick for what I'm trying to achieve with it. And I don't do too many scalps, right? I'm not a scalper. Even on NQ, if I find a good setup, I want to be able to hold that for at least 30 minutes. Now, when everything settles after the craziness of the New York Open and everything, it becomes a lot more palatable, even though it's still like, you know, frankly, batshit crazy. But it, you know, it's easier to read. Anything that happens before, it's scalper territory, and that's, you know, it's not my style of trading. For that, you're probably better off asking Rips for like shorter term stuff. I can look at the overall equities picture, but let me just let's drag out the other one. Okay, I do have a combine that we can use. I actually had to get in touch with the funding guys, because I did pay for equities the other day, since you guys keep asking me about NQ and all that. Okay, so we have a balance on the daily chart. You know, that's balance on NQ. ES actually looks weaker because it's trying to break the balance to the downside. Next area of thicker volumes on ES is 60.2950, and on NQ, do we have something similar? Yeah, except that number is 21.2012. That's what a number, isn't it? It's like, how to confuse yourself. Let me drag out some options levels as well, because that tends to work pretty well in equities, which is on my little screen up there. Because whenever you're sitting around all-time highs, anything else that might be of interest can be far away. So most of the reference points that you were banking on using, they're just not around. So one workaround is to see what the options activity is, right? Okay, and just let me grab one more piece of data. I was running a bit late today. We have a whole bunch of stuff happening, and I have people to come and see the roof, and you know, it's just a crazy day. And then I'm going to be alone with the dogs tomorrow because my husband's godmother passed away last week, so he has to be away. So yeah, it's going to be very crazy for me. All right, let's see what we've got in the options activity. So there is a level of interest around 21,425. If we manage to go lower, there is a little bit of space down to 400s, and then further down to about 380, which is ballpark where the market shift happened last night for power hour. I was actually in on this on the short side last night on one of my other accounts. Let's have a look at the 30-minute chart. It might become a little bit more obvious. So I was looking at this area here, and right around, I think I was watching Coach Jay. He was on whatever they call it, Back to the Future segment, I think, and he was talking about 400s. Sorry, no, 426. Now I had a level of 400, so I saw the momentum picking up. So I figured, yeah, maybe I'll just try this. So basically, I was in on the break over here, and I did manage to get the 400, but then I I exited. That was it. And then we saw this happen, right? That was expected to me. At the time, we had heavily negative delta. And usually you get some sort of pop the other side. Now, it was a bit muted. I was expecting a bit more from this, but it didn't quite happen. Obviously, this month, we also have the rollover in equities. And whilst we have the rollover in our products that we trade here a lot more frequently every month, in equities, that rollover is like a big event. It's like, oh my God, equities are rolling over. Everybody freaks out. Because it means that the momentum is probably not going to be as crazy. But actually, that suits me. So, I'm a big contrarian. So whatever other people do, I almost always do the opposite. And, that could be something to do with the fact that I'm left-handed or whatever. But yeah, it's just interesting. Let's have a look at Russell as well from the daily chart, of course. Russell looks pretty weak. So out of the equities that I've looked so far, this looks much weaker than the others. And just for the overall market view, here is the Dow, also pretty weak. So if you're looking at shorting equities, because you have that balance on ES and NQ, I don't know. I mean, to me, YM or RTY would be a better choice. Now, you guys know I trade DAX a lot. And yeah, I mean, yesterday I was in both long and short on DAX. So I did one long, and then it's sort of, my throat is still playing up. Oh my God. So I did one long in sort of the later part of the London session. And then very late in the day, I actually shorted it as well. But it was all like I barely got, I think the first one I got like 50 ticks. And the second one, I only managed to get about like 15 ticks out of it. So overall, it was a great day, but just like it felt a little bit like pulling teeth, squeezing blood out of a stone. Not the easiest day. So today, if we know that generally equities have found the balance and we have the CPI release, I mean, there could be some more shorts in this because it's been a long time since we actually had the balance. So this was the last time Dow was turning around. And let's have a look at NQ because I know you guys are obsessed with NQ. So this was the last day. So how much did that last? The balance actually lasted 1, 2, 3, 4 days. Then we had this nice engulfing candle that ended the day below the previous day's low, or the whole consolidation low. So that's something to look out for, actually. When we just look at the composition of the candles, I don't really like balances in equities that have buying wicks. So if I'm going to do anything with shorts in equities, I would like to see the engulfing candle that engulfs and closes. So, big detail there. Is that a word? Big detail? I can't even say that. Devil is in the detail. If you have a buying wick and it pulls back into the range of the balance, that's still a range, right? That's not really a brand new trend change. It just means that we tested below it, couldn't really find any business, and then we pulled right back. So for a true sort of correction, if you will, I would like to see something akin to this, where we go below the whole balance and we close below it. That would open up, more options for shorts, like if you see what happened here the next day. And then that was the only day that we had the big flush down. Didn't even reach demand, because it was so strong. Like maybe on the weekly chart, but on the daily chart, we just kind of smashed through, pulled right back. So, be careful of the equities resilience to the upside because of that. I really want to nitpick over what sort of price action we need to have before we say, yeah, this is now, open for shorts. So until such time, I would say that any shorts should be more scalpy. And then if you're going to do longs, you can hold them more, right? Especially if it's coming from a good area and not like a random, impulse trade. If you have a good level, it starts to turn around, you can be more aggressive in your holds, right? You can hold longer, even with NQ rolling around like 50 points at a time. Whenever I trade NQ, I start with a disaster stop of 35 handles, which is ballpark about 140 ticks. So when I'm looking for a scalp, in my eyes, a scalp would be 140 ticks, so sort of like a 1-to-1. But frequently, if you look at the ranges on NQ, it does offer up to 1,000 ticks, right? So that's your average range. So let me just get you the actual, like last time I looked, it was actually a little bit lower than that. It was like 800 and something. But that's still a hell of a lot of ticks in the day. Yeah, so we're sitting at 819 for the entire day's average range. And most of that, in fact, all of it is done for the New York session. Okay, so you have a range when you're looking at system design of any sort, knowing how much something moves and what sort of a stop loss you have in relation to that. That is a very useful measure if you're going to think about risk reward, right? So let's say that's, if we have 819, that's like 204 handles, 204 points that we have available, right? So if you're using 20 handles, so not 20 ticks, 20 handles, you're not even using, so let's say 20 handles and you have 819. I mean, you're using such a minute, like look at this, 0.02% of the entire, the entire day's range. Is that good enough for your trade to survive more than like a minute? Of course not. So whenever I see people using such tiny stop losses and then they're like, oh, I can never stay in long enough. Yeah, I wonder why, mate. So maybe widen your stop if you're having troubles, because I saw somebody complaining how they can't hold trades. Well, in my experience coaching people, what tends to happen is that those people are usually using a very, very tight stop. In order to hold trades longer, your stops need to be wider. And I know some people here, we had one guy who found the Holy Grail, who was like, oh, if I use bigger stops, I would win every trade. It's like, great. With a positive risk reward was my question, and then there was no answer. So if you can do what I do, if you can have risk reward of 1.4 to 1.7 all the way up to 2.3 at times with wider stops, yeah, that is the Holy Grail, man. But if you're thinking that using larger stops is going to enable you to win every trade and then you're still banking on the negative risk reward, that goes wrong very quickly, right? So just purely from a system design point of view, you have to see how big your stop loss or how small your stop loss is in that range. What kind of average range are we working with? I like to use a formula, right? I have a formula of how much of a stop loss size I'm going to use. So with that approach, I will always have a way to scale my stops to the volatility of the product we're trading. Now, there are diminishing returns if you don't have any movement, because that's something we need as intraday traders. We need to have positive conditions for day traders, right? If you don't have that, that's why I look at those volatility indexes, because it shows me whether the environment is suitable for day trading or not. And then because I trade multiple things, that's kind of like the first line of resistance. Is VIX high enough? Is CVOL high enough? If not, that product goes on the sidelines and goes in the bin until that changes, right? And similar to equities, right? I think VIX has fallen in equities now. Yes, it's fallen to like 14. That's not good. So in that environment, you would expect a more range-bound market. So all of you who are still looking for crazy momentum trades in ES, you're not in the right environment to be doing that. We are in rollover. We're coming up to a Christmas period. And yes, there will be movement, but you can't do breakouts and then expect the ranges to go crazy. In fact, we expect a compression of the range. So that should be your baseline analysis of just, is my strategy adept to deal with this market condition? And if you're only a momentum trader, maybe you sit back or you learn how to trade ranges. One of the two. Of course, the second thing is more difficult, right? Let's have a look at some questions here. So I went over that one. Dee, what moving averages are you using? Look, moving averages for me, guys, are just like one of the timing tools. Like, they're not really levels. They're not anything important. They are just there whenever I'm entering a trade to get me out of a trade, right? So not even to get me in, because sometimes I look for much larger time frames. But if I'm already in a trade, like let's say I want to play a breakout on copper, and we've gone from, actually let's do that on the other one, because what have I done with it now? There it is, there we are. Let's make this bigger. Let's find copper. And then I can show you what those moving average are for me. Now, I said I had that level down below at 421.35. I don't think that's going to be reached, but I'm just going to illustrate what managing your trade via this ribbon is doing, right? So if I go short now, let's actually make this a little bit bigger, because I have it set for a little bit less risk here. But let's say that you saw that the price is breaking out of the initial balance low. You have more levels down at 421.35, and we are breaking through an HVL in options data with some room all the way down to 420 actually, so that is matching some of the intraday flush that we might see ahead of the CPI. But overall, the larger time frames remain intact. So how would you manage this? How do I manage this? Well, if it goes against me immediately and if it rises above my ribbon, and all of these are 3 9 EMAs. One is closing on the high, so I'm going to show you that. So this one is closing in the middle, sort of like middle of the line. That's the middle one, right? Then I have the one that closes on the high, so that's the difference. And I have the final one that closes on the low, right? That's what they are. And all they are for me is just timing tools. So it is literally allowing me to see whether we're still in some sort of a trending move, breakout move, or, mean reversion move, which is my bread and butter, or whether it's fading, right? Whether the steam is running out, whether there's no more juice in it, and now we're trying to reverse. So this works both ways. So basically, if I'm in a trade already, and it suddenly pings against me, prints basically a candle that goes above the ribbon, and then also prints another candle outside of the ribbon in the same direction against my trade, that is an early exit for me, right? That means I got the timing wrong, or the level is not working out and the level is breaking down, or it's turning around. It's basically doing things that I didn't want to see. And it enables me to cut my trades early. So rather than waiting for my full disaster stop, I can cut it early. But at the same time, if we continue to see committed movement below the 9 EMA ribbon, that keeps me in a trade, right? So I've spoken about this before, where I, as a former swing trader, have always had this hang up of holding trades way too long. So I worked to develop tools that will unequivocally, systematically tell me, hey, just close the bloody trade. And that's what the ribbon does for me. So they are not to be used in, any kind of levels. It's like, oh, we're touching the ribbon. It's like, yes, of course we're going to be touching the ribbon. It's following the price. All of my other levels, even when I talk about time of day as a level, right? So time of day has to be right for the type of a setup that I'm taking. Everything else that I do, all of the other levels that I take from my methodology is a blend of supply demand, market profile, and then options data and time of day. Those are the four big things that I use as sort of pillars to help me understand exactly what I should be doing. Should I be doing scalpy type trades if it's a range bound day? Where to take profits and targets. So it's all very, very systematic. There's no, let's just, like, when it comes to entering a trade, of course, that's going to be discretionary. I'm not a robot. But everything else around it, it offers situational awareness that very few methodologies have as a whole, right? So some people have it naturally without needing to have all these different puzzle pieces. Like, for example, Dakota, right? He's very, very in tune with what the market is doing. But at the same time, when he was here, he told us that he first started looking at the markets when he was 9. And he's, 31 now? That's a long time. And even if he wasn't very profitable, he started looking at the markets during his formative years. Most of us don't even look at the markets until we get to, our 20s. I certainly started fairly late, if you look at it that way. I started playing music at 4. So naturally, I'm a very high-skilled musician, and I play 4 instruments because I started earlier than all the rest of the guys, right? And similarly, if you've been doing that for such a long time, you don't necessarily need to look at all that. And these days, when I look at the charts, I can tell you within about 3 to 4 minutes exactly what's going on. Now, when I was starting out, A, it took me a hell of a long time to develop that. And B, it's something that really requires forward testing, right? You sit there, you turn up, you journal what you're seeing, you don't even trade, right? You're just observing what you're seeing. And then eventually you start to develop something called situational awareness. And that's what we mean, when people go, oh, how do you know it's a range-bound day? Because I have the tools that I've been staring at for the last 17 years that tell me. And it's like, I've seen this before. This is what usually happens. And sure, there's an outlier day, but as a general rule, probabilities of both my experience and actually what tends to happen when, for example, you have the initial balance that gets popped to both sides. So you have the initial balance set, price goes up, rotates all the way down, price goes down. What happens on most days? It's what happened in ES yesterday. So I'm just going to jump to ES quickly. So we had the initial balance set for a long time. And this flush kind of came later, but it took its sorry time to actually pop to the other side. And I want to show you exactly what happened. It was all spiky candles, and spikiness is always a sign of the range. So this was the high, this was the low. I'm going to change the color of this in a minute to make it align, just make it white. So that was your initial balance. First attempt was to the upside, and this is what Hogue and I say failed auction, right? So the auction failed, and then it rotated. These are all 30-minute candles, so just keep that in mind. And as it was doing that, I was thinking to myself, okay, well, we've got some, London demand here. if we can create a neutral day type, so if we go below the initial balance, this is a setup for me to run my mean reversion range day trade to the middle. Now, there was one caveat yesterday about that setup, is that the range was terrible. So I prefer to have at least 120 ticks of the initial balance range or session range before I'm going to attempt that, because otherwise you just don't have enough room and it's just pointless to me. It's a waste of time. However, let's really zoom in here. So this is the point. Do we have like a circle or something? Yeah. So where did it pop the initial balance? Here. So there it was. Whoops. Okay. Maybe you shouldn't do a circle. Let's try maybe an ellipse or something. So this was the initial balance pop. Okay, so that was the pop to the downside. Now, if you don't know anything about market profile or initial balance and stuff, you'll be like, well, what's the significance of that? Well, the significance is because once it pops, this is actually a very, very quick trade, right? This is one of my scalps. This is the only day that I would actually consider scalps. So range is decent, and then we have a neutral day type, and this sort of thing happens. And look at how quickly it actually turns around. All right, so we popped the low. We're going to go even closer. This was the 15-minute candle where we popped the low. And then it goes up to VWAP overnight. Almost immediately. I mean, it was a 30-minute trade, but that is the range trade that I would take. So neutral day trade from the other side up to VWAP. Done, right? So that will be the scalp that is super obvious to me. I will take that trade every single time, and it works at a ridiculously high rate, especially in equities if it's a long. Okay, so if it's a neutral day short where we already popped lows, that has lower probabilities because of the strong trend. But if it's a long on an equity index, neutral day, hell yeah, I'm taking that. You know. So, don't get hung up too much on about my ribbon, because that is just a timing tool. All of this other stuff that I've just talked about, that is how I trade, right? But when it comes to getting me out of a trade that I'm planning as a longer term, like 2 to 3 hours, if it starts to lose steam, and if it quickly turns around, I need a way to get myself out, which used to be a problem for me. So, yeah. Can you look at gold, please? Okay, let's have a look at gold. Gold has failed the auction. Let me keep an eye on this, and then we can have a look at what's going on. Right now, if we're looking at the ribbon, there's nothing to do here. It's still just range bound. So until the price exits ribbon either way, there's no action. And then if it goes lower, there's still no action, because that is what I want out of this trade, right? But let's have a look at gold. I'm going to do the second chart here. Daily chart, as usual, we're inside a supply. It's not a great supply because we kind of went up and then it smashed down, consolidated forever. However, we have the bigger volume areas and a better quality supply than this one, up at 2763 roughly. So it's this one. Let me just get rid of that. So this is the supply where I would start considering shorts in gold that can last me a longer time, meaning 3 to 4 hours rather than just staying in for 30 to 45 minutes. But on an intraday level, we are coming into an area where some sellers were, but my problem with this area is that they didn't have a follow through and they just stopped and then we returned there. generally that's a bad sign if you're looking for swings. You want the price to either test the supply already on like the second candle and then stay away from it. If it doesn't, that's actually a bullish signal, and the further in you go, the more likelihood that we're going to break upside to reach this area here. So I'm not too keen on shorts today in gold because of that. Let's have a look at some intraday levels. So where is overnight VWAP? We're just a little bit underneath VWAP. Right now, the initial bounce size is about 112 ticks. Initial bounce started with this candle. All right, so look at what is happening to this copper trade. This is a sample trade. It's not an actual setup that I would take in anything that matters, but it's just to illustrate how the ribbon is working. So look at this now. 100 tick chart, what is it doing? It's showing me that the price is going back into initial balance, first and foremost, and B, that this is now above the ribbon. If I now get yet another candle that goes outside of the ribbon, that's my exit. It's done, right? It's done. So we'll see whether that happens. It's a little bit slower, so it's not that difficult to track while I talk about gold. But gold, yeah, so technically a failed auction right now. And we opened outside of the London range because there was a move. Okay, so this would be my early exit now in copper. And that would be it. That's how I use the ribbon, right? So it's not a level, it's a timing tool. Hopefully that makes sense. Now, gold, let's see what happens around the overnight VWAP here. But if this, I mean, this is London. Yesterday, it didn't really move until like 1 p.m. It just stayed very range bound. If we go back to the London session, there it is. I mean, look how painful this is. This is kind of, well, we went up. We popped Asia high. And then we did nothing. 30-minute chart, right? So this is 30 minutes, 1 hour. Okay, we made a high, but then consolidated. So that's 1 hour, 2 hours, 3 hours. 3 hours. You would have had to painfully sit it out, sit in your one trade. I mean, I can generally do that, but you know, I say the time of day is a level. Now, this is exactly why. Because I don't want to stay in trades for 3 hours to get 20 ticks, right? If I'm going to stay in a trade for 3 hours, I want to get 150 to 200 ticks. Okay? All right, so using the same idea in copper, we now have a candle that is outside of the ribbon. So it's turned around and it's hanging outside. So now, if you had a setup, you can go, hey, I'm now going to run along here. Why? Well, because it's a potential for a failed auction. We have a decent move outside. And then if this candle on the 100 tick chart can actually stay outside of the ribbon to the opposite side, that can be used as a timing tool for an entry. But, you know, you want to see some momentum pushing in that case. If, again, it doesn't do that and it falls down, well, that means you either got the level wrong or you're in a consolidation, in which case you cannot use a ribbon. You actually have to use price action to find the edges. And then if you want to ping it up and down in tiny little scalps on a super small time frame, you can do that too. I don't do that. If I see that kind of a consolidation and the range is tiny, I stay out. So there are things that I will not trade in a range if it's not offering me at least 1 R for my style of trading. But yeah, so that's how I use ribbons. So gold, yeah, I would expect to see some more longs at some point this week. Right now, I don't think they're going to do anything until we get CPI. And this is another reason why I don't really want to trade in any accounts that actually matter. So we have CPI at 1:30 my time. That's in about 3.5 hours time or so. And then we had, okay, so then we have the inventories, but we also have the Canadian rate statement and press conference. That is probably going to have a decent effect on crude oil and RBOB. So today I'm probably going to be trading quite late once all of those are out of the way. And I'm not going to be getting involved in, watching paint dry unless it's like a combine and I'm trying to illustrate something. So, yeah, so be careful with the momentum because it's likely only going to come in and around the CPI release. Usually what happens to gold on CPI is that it opens COMEX right when CPI is happening. Well, technically it opens it 10 minutes before, but, over the years, they actually decided that it's going to be not that relevant if we start COMEX on the bottom of the hour. So everyone kind of takes 1:30 p.m. London time as the start of COMEX. Now, usually what happens is because the CPI is such an important release, you will get a massive initial balance, okay? So how I like to approach that is to wait until the craziness is over for at least 15 minutes and then maybe see if there's a momentum trade there that is more of a scalp, but because it's a momentum trade during CPI or post-CPI, you can actually squeeze out quite a lot of ticks out of it. However, if I want a stress-free day, I will usually just sit all of that out and focus on something else. Sometimes copper is a very, very good alternative for that because while it moves a lot, after the release, it actually gives a very nice sort of committed movement that isn't too wicky. So gold can be a total wick fest for CPI and for a lot of the other releases. But copper, it wicks a little bit when the release is happening and then it provides you with a nice setup. I usually use the ribbons for that, but obviously my levels too. So if I have a setup in mind already, there's a level there, I will trade it. If you don't have a level, and if everything just goes into one unidirectional day that goes crazy, that to me constitutes a risky day, and I usually will stay out of any news release that looks like that. So going into a single directional day that breaks all of the levels and then you're stuck with no levels, no trades, right? So that's something to keep in mind. But if you manage to find a trade in copper, that's great. Keep in mind that on the CPI day, there can be a range-bound trade later on, but the range trade has to be done in a different way. So you would be looking for the range to get established after the craziness, and then you effectively look at that as any other range. So put on your Dolby hat, find a range, and try sniping things either side. But one thing also to keep in mind is that if you have, let's say, an upward move, you will find that that upside movement can have a greater pull. So if you're looking for shorts of the range, they might be partials because they still have that fundamental release that kind of changed the relationship of what was going on. And now they're like, hey, yes, we're just staying in a range, but longs is still, So just take in the direction of the initial balance that it took. If it's very wicky, if it's all doji stuff, just stay out of it. That's a bloody mess. But if there is a committed direction during the initial balance that continues, that will give you the idea of what they tried to do with it, and then that sort of stays there for the majority of the day. So that would be another way to approach that. Let's have a look at okay, is it fair to say ribbon dictates all of your trading? No, ribbon dictates the tiniest amount of my trading. Everything else, are you guys sitting on your ears? What's going on? I don't use the ribbon to dictate my trading. The ribbon is there for a timing tool for either momentum trades, which would be a mean reversion, or a breakout, which, by the way, breakouts I very rarely do. For everything else, I will use 15 and 30-minute chart. Let's say that I'm looking for an average daily range high reversal. I'm not going to be using a ribbon for that. I'm going to be using a 15-minute chart engulfing, two or three bar reversal, consolidation with an engulfing finisher. That's what I will be using. I wouldn't be using a ribbon. Ribbon is just there for quicker trades. And then once I'm already in a trade with a momentum trade, so only for momentum setups only, that's when the ribbon comes in. So no, it absolutely does not impact all of my trading, nor does it define my trading. That's ridiculous. It's just an indicator of momentum. You know, you can use anything. You can use your eyes if you want. I prefer to have something visual on the chart that will tell me that, yeah, actually, this next period is not as good as the previous one was. So basically, we're losing steam. That's the only reason why it's there. Yeah, I use Bookmap for that as well, right? If I'm looking at Bookmap and there's still a lot of buyers and they're committed at pushing the price in the same direction, and then at some point they start to consolidate, then start reversing, bigger bubbles start appearing. It's the same thing, right? But I don't want to be using Bookmap and this and that. I just wanted something that will give me the same piece of information, and that I can explain it in a less discretionary way to everybody else who can also use it in a similar fashion. But, you know, for me, the ribbon equals same thing that I can see on Bookmap when it comes to momentum and whether I should keep staying in a trade or not. And then when it comes to things like delta divergence, you know, that's something that is also very useful, especially if you're going to get a failed auction or something. And then let's say we're looking at a failed auction long here. And let's say that we had this move down in copper, right? So now you have the price, for example, it makes a low, but the delta doesn't make a low. That is a delta divergence, right? So that opens up a higher probability of the failed auction working out. Now, I haven't looked at this that closely because, like I said, this was just like an idea that I had to illustrate the ribbon. It's not a real trade. But yeah, for example, let's just have a look. And in fact, yes, we did have something similar happening in Delta. Okay, I'm going to show you my trading view chart because we still don't have Delta on here. So this is the copper futures 10-minute chart. This is the cumulative Delta down here. Now, I don't use cumulative Delta that much, but here is what I'm talking about. So we made a low. However, for that same time period, this one made a high. So you can say that's a delta divergence, and that it opens up the potential for the failed auction, which is also with the higher time frame, and it increases the probabilities because now we have delta divergence. This one is not making a low, price makes a low. That basically increases the probabilities of a setup. But, you know, that has nothing to do. And we have HVL here, you know. But that has nothing to do with the ribbon, right? So when you're looking for an entry, you have options. You can enter when you see a 3-bar reversal. I'm pretty sure we're going to find one here. Okay, it's a 2-bar on a 15-minute chart. Consolidation with a bullish engulfing finisher on a 5-minute chart. Same thing on the 10-minute chart. So what can be your entry? Well, you can wait for an engulfing back into the initial balance, and that's your entry. You don't need to mess around with the ribbon, right? That's one entry. Another entry would be to look for Bookmap, right? So are there any big bubbles stepping in? And then just not actually have any sort of a super systematic way. Just click a button, enter, you know. That's perfectly valid too. You know, it's literally just a choice of how you approach entries. I found something that works for me to get me out of my momentum trades on time because I had this problem of never closing trades and just going, well, just going to stay here forever. And that's not what you want from momentums. You know, you get like 40, 50 ticks and it starts to turn. And I'm like, you know what? I'm just going to take this. I'm not going to wait for 70 ticks because it's not going there at this time. So, you know, it's not the be-all and end-all. It definitely isn't. It's just like the tiniest piece of the puzzle that helps me take profits. Take a look at it that way, okay? And I explained the ribbon indicator, right? So it's 3 9 EMAs. Jesse James says, good morning, Dee. How is everything? Yeah, pretty busy, actually. Bit hectic. How do you typically expect the markets to behave going into Christmas? Is it normally quiet or is it the opposite? So in the run-up to the Christmas week, it can be a pretty juicy environment, right? Now, usually you get equities rolling over around about that time, which will dry up the market somewhat. But there was only really 1 year, and that was bizarrely when Trump was elected last time, when we had nothing, like nothing, man. So it was so dead that I actually took a break. Like I took the entirety of like 3-4 weeks. I didn't come back even until like the middle of January. I didn't trade for like 5-6 weeks because there was nothing. Like the everything died, not just on the equity side, but crude oil had a terrible year that year. Now, I don't know whether that same thing is the reason why crude oil is having a terrible year this year. But crude oil is not itself. Like crude oil seems to have changed personalities, and it's actually doing the same thing that Forex did to me in 2012. Luckily, we have a whole bunch of other things, like RBOB is still moving. You know, natural gas is actually really good. I've been kind of observing it for the last month or so, and I'm just in the stages of trying it out on combines and stuff. That's why you saw NGF on the side here, just to see, you know, whether I'm going to like how it's actually behaving. But other than that, I don't know whether this is going to be the year to use the statistical probabilities of like, hey, yeah, this is going to be normal, because it was the election year. Those are always weird. I wish I had a crystal ball, Jesse, to tell you, yes, most years in the run-up to Christmas are brilliant, which is the case. But my experience with the previous election year and Trump being in the running, and, you know, whether they didn't know what he was going to do, whether it was a bigger uncertainty than this time around, I don't know. You know, we have to wait and see. All you can do is to have a look at the ranges, have a look at VIX, you know, let those be your guides of how much movement there is. If VIX goes to pan, like if it kind of goes down the drain, and you see the daily ranges are dwindling, so you get like 3 days of nothingness or weirdness where most of the day is just range bound, then it sort of breaks out at the end of the day. That's also unusual, right? We should have most of the volume and movement happening in the open. So it's like, why is it not happening into the end of the day? It's because everybody is closing their positions and nobody was doing active positions. So listen to Hogue. You know, what's happening with the open interest? Is it rising? Is it falling? That can be a very good indication as well. I'm not an open interest specialist at all, so I know how it works. Obviously, you know, Series 3 is rife with questions about that, so you have to know it. But it's not something that I track myself. However, we have Hogue. He tracks it all the time. So whenever I need to know anything about open interest, I will reach out to Hogue and I'll be like, hey, you know, what's happening with open interest? What is your read on it? Do you think that it's rising because we just have some like short covering? Like, you know, what's happening? And he will provide that information for me. So use those like more, like they're still technical tools, but they're more wider indicators. You know, they are indicators of the underlying market conditions. And even though it's not fundamental, it is technical, right? So open interest, you know, ranges, VIX, that's not really nothing to do with fundamentals, right? Fundamentals are things like interest rates, you know, inflation data, jobs, that's all fundamentals. We don't look at that as much on an intraday level. But we do have ways to figure out what is happening in the market conditions in general. And like I said, open interest, VIX, intraday ranges are very good indicators of that. So yeah, I wish I could help you more, but hopefully that will be enough to see whether we still have any movement. for now, it certainly looks like they've gone to the drier end, younger dryers, the drier end of liquidity. But, luckily NQ has, such a big range that it's going to take a long time until that actually dries out properly. All right. That's it pretty much, guys. This failed auction in copper is very slow for now because, again, they're waiting for CPI. There's not that much going on. And it's a combine, so who cares, right? Let me see if I have any plugs for you. I don't think so. I think we have one of the producers who went on holiday. But if you're looking for people to help you out with your trading, we have all of our lovely coaches in Discord. We are now 100,000 members in Discord. So check that out. I'm also going to say, please, please, please upvote. Keep upvoting Eurex because they are still, just not really pushing it. And so please upvote that. Tell your friends, tell your dogs. I know that Sarah asked me what sort of dogs I have. So I have a Pomeranian and a King Charles Cavalier. They had puppies, so the puppies are Cavapoms. Cavalier Pomeranian crosses. And the reason why is because our first dude was a Cavapom rescue, and I just fell in love with the breed. They are the perfect blend of both. A little bit crazy, very affectionate. Quite fluffy, but not as difficult to groom as Pomeranians. So hopefully that clarifies things. Okay, guys, click the like, click subscribe, because that will help us to grow the segment as we go further. Thank you again for all your lovely questions. I know there's a bit of confusion there with one of the questions because it's like, oh yeah, is that all of your trading? Well, it's a part of it, I have many moving parts, and that's how I like it. You can make trading as simple or as complex as you wish, as long as you don't get paralysis analysis. Okay, if your brain is able to process different things, no problem. If you find that you're suddenly doing this whole thing, analysis paralysis, try using mind maps. There's this thing called Bubble, or, there's loads of them online. You can even use Lucid Chart and stuff. So anything that can help you visualize it, so put it in a flow diagram and, set some steps to it. That's always been an amazing way for me to teach others, but also when I was teaching myself and I was trying to digest different pieces of information. It's not that it's like super complex. It's far from it. Trading is not rocket science. However, sometimes you need to remember quite a lot of things. You need to remember time of day. You need to remember your stop loss size. You need to remember where your targets are. You need to remember, that it's lunchtime and that maybe you should be taking profits around about there. So all of that means that you will sometimes miss things. But if you put it in a flow diagram, I promise you it's all going to get a lot easier. So that is one thing that I can promise, that use of flow diagrams in trading as a visual aid will do a lot of things that will be positive for your trading. So yeah, utilize all of those tools. Yes, Sarah, I kept them all. It wasn't an accident litter with us. It was fully planned. We planned it for like a year. The problem was that on the scan, we could see 3 or 2. They said, oh, well, there's definitely 2 puppies, maybe 3. And then on the day 6 popped out. So it was COVID. We didn't really, I always wanted to have a lot of dogs. So it wasn't like, oh my God, now what? I always said that my dream was to be covered in puppies, and here we are. So I am living my dream. They are a handful, but I absolutely love them. Like this morning, I woke up, and as soon as I opened my eyes, I had my shot of espresso, and then 4 of them were on top of me, just cuddling. To me, that is definition of heaven, right? So I absolutely love having a bunch of dogs on me, around me. And call me the crazy dog lady, mad dog lady, MDL. I'm going to finish it on that note of crazy puppies and covered in dogs. I will see if we can have Coach Ray here tomorrow to give us his take on what's going on in the markets. We will have CPI and the inventories out of the way. Until tomorrow, guys, enjoy the rest of your day. Enjoy the main broadcast. I'm Deeyana Angelo, aka Marcus Dee, and this has been the London session on TopstepTV. Take care.